Today, we're going to be taking a look at the Walt Disney Company,
The Walt Disney Company.
a company that's
Yeah.
synonymous with entertainment. I mean,
That's pretty much, yeah.
we've got financial reports, insider trading activity, analyst opinions.
Really, whole lot of
I
stuff.
think we're piecing together a puzzle,
Oh, yeah.
to figure out if the House of Mouse is still magical for investors.
It's a very interesting time for Disney, I think. You've got this legacy giant,
Yeah.
known for its theme parks and classic films and all that.
Right.
Trying to navigate this whole new world of streaming and the decline of traditional television.
It's almost like watching an elephant trying to learn ballet, isn't it? It's graceful in its own way.
Yeah,
But
it's a challenge.
definitely some challenges there.
Yeah.
Speaking of challenges,
Mm-hmm.
let's look at their recent performance.
Okay.
Their Q4 2024 earnings report had some bright spots.
Uh-huh.
But I'm curious to hear your take on it.
On the surface, things look pretty good, I'd say. They beat earnings per share expectations,
Okay.
which is always a win in the eyes of Wall Street.
Right.
And a 6% increase in revenue,
Okay.
driven in part by those big theatrical releases like Inside Out 2 and Deadpool and Wolverine.
Okay, so for those of us who don't speak fluent finance,
Sure.
can you break down why earnings per share EPS is such a big deal?
Well, EPS is essentially the portion of a company's profit that is allocated to each outstanding share of common stock.
Okay.
It's a key metric that investors use to gauge a company's profitability and its potential for future growth.
So when a company beats EPS estimates,
Yeah.
it signals to investors that,
They're doing well, yeah, they're performing well and potentially exceeding expectations.
okay,
Yeah.
so it's like a report card for how efficiently the company is using its money to generate profit.
And in Disney's case, exceeding those EPS estimates shows that they're managing to navigate, this complex and rapidly changing media landscape
Right.
while still delivering value to their shareholders.
That makes sense. And you mentioned the success of those theatrical releases.
Right.
It seems like the big screen still has some magic left in it, even in the age of streaming.
Absolutely. Those blockbuster films are important for a few reasons.
Okay.
First, they generate substantial box office revenue,
Right.
but they also feed into Disney's wider ecosystem.
Okay.
They become content for Disney Plus. They
Right.
inspire merchandise.
Yeah.
They can even become the basis for new attractions at their theme parks.
Oh, wow.
It's that classic Disney flywheel in action.
Yeah.
Each segment of the business reinforces and strengthens the others.
So those big budget movies aren't just about ticket sales.
Right.
They're really an investment in the entire Disney brand.
Precisely. They're creating valuable intellectual property
Okay.
that can be leveraged across multiple platforms and revenue streams.
Okay, speaking of platforms, let's talk about Disney Plus.
Yeah.
They're still racking up subscribers, even with those recent price increases.
Mm-hmm.
And they've introduced that ad-supported tier,
Yes.
which seems to be gaining traction, especially here in the U.S.
Yeah, the direct-to-consumer segment, which includes Disney Plus, is a crucial part of their growth strategy.
Okay.
And they're projecting double-digit profit margins for this business beyond 2026.
Double-digit margins. That sounds impressive.
Yeah.
But for someone who's not a Wall Street wizard, what does that actually mean?
It means they're expecting to make a healthy profit from their streaming endeavors.
Okay.
In simple terms, a profit margin is the percentage of revenue that a company keeps as profit after deducting all its expenses.
Right.
So a double-digit margin indicates strong profitability,
Okay.
which is reassuring for investors who have been concerned about the massive investments
Right.
Disney has been making in streaming.
So they're basically saying, hey, we know we're spending a lot on streaming,
Yeah.
but trust us, it's going to pay off big time in the long run.
That's a good way to put it.
Yeah?
Yet they're signaling confidence in their long-term streaming strategy.
Okay.
And those projected margins suggest they have a solid plan to monetize their content and attract a large subscriber base.
That's good news for Disney fans who want to see them thrive in the streaming wars.
Right.
But it's not all smooth sailing, is it?
Yeah.
We can't ignore the elephant in the room.
Yeah.
The decline of their linear networks.
Yeah.
Like traditional cable TV.
Right. That's a significant challenge.
Yeah.
The cable TV industry is facing a secular decline
Uh-huh.
as viewers increasingly cut the cord and embrace streaming.
Right.
This trend is affecting the entire industry, but it's particularly impactful for Disney,
Yeah.
with its vast network of channels like ESPN and ABC.
So how is Disney addressing this decline? Are they just hoping their streaming success will make up for those cable losses?
They're acknowledging investor concerns about the decline of linear networks, and they are investing heavily in streaming to offset those losses.
Okay.
In their earnings call, they emphasize that their streaming strategy acts as a hedge against these challenges.
Okay.
But it's a balancing act as they manage this transition.
Okay, so they're basically saying, don't worry, we're pivoting to where the viewers are going.
Right.
But it sounds like there are some risks involved in this high-wire act.
Absolutely. The transition from linear TV to streaming is complex.
Yeah.
And requires significant investment. It's not as simple as just flipping a switch.
Right.
They need to continue producing high-quality content that attracts subscribers, manage the cost of streaming rights and technology, and adapt to the evolving viewing habits of their audience.
And on top of all that, they've got this major launch coming up.
Yeah.
The ESPN flagship direct-to-consumer offering, which they're calling a transformative product.
Yes, this is a big bet for Disney, and it's scheduled to launch in early fall 2025.
Wow.
They're describing it as a highly personalized experience with integrated betting and other features designed to appeal to sports fans. They're clearly positioning it as a key growth driver in the coming years.
So we've got this legacy giant making bold moves in the digital space. It's a fascinating mix of old and new. And it makes you wonder how Wall Street is viewing all of this.
Right.
You've got some analyst opinions in front of you.
I do.
What's the general sentiment?
Well, it's a bit of a mixed bag, actually. You've got some analysts like Evercore ISI, who are quite bullish on Disney with a price target of $134.
Okay.
And then you've got others like Piper Sandler who are more cautious with a target of $95.
Wow, that's a pretty wide range.
Yeah.
What do you make of this discrepancy?
Well, I think it comes down to how much faith each analyst has in Disney's ability to successfully navigate this transition to a streaming-first model. Those who are more bullish likely believe that Disney's brand power, content library, and strategic investments will ultimately lead to strong growth in the streaming arena. Those who are more cautious might have concerns about the decline of linear networks, the intensifying competition in the streaming market, or the overall economic climate.
It sounds like Wall Street is still trying to figure out which way the wind is blowing. And speaking of figuring things out, you mentioned this concept of an economic moat earlier.
Yeah.
I'm not sure I fully grasp what that means in the context of Disney.
An economic moat is a term used to describe a company's competitive advantage. What makes it difficult for rivals to steal their market share.
Got it.
It's like a protective barrier around a castle, making it hard for enemies to attack.
I like that analogy. A castle with a moat filled with crocodiles and fire-breathing dragons, maybe?
That's one way to visualize it.
Yeah.
But in Disney's case, their moat is primarily built on their iconic brands. Think Mickey Mouse, Marvel, Star Wars. And their vast content library. These are incredibly valuable assets that are difficult to replicate.
So it's like a treasure chest filled with beloved characters and stories that people are willing to pay for.
Exactly. However, even with this treasure chest, their moat is considered narrow at the moment.
Really?
Yeah, this is because the streaming landscape is getting incredibly competitive. And consumer viewing habits are changing rapidly.
Okay, so it's like their castle is under siege from all sides, with Netflix, Amazon, and Apple trying to storm the gates.
That's a dramatic way to put it, but you get the idea.
Yeah.
While Disney's brand power and content library offer some protection, they are facing increasing pressure.
And then there's this whole insider trading thing.
Yeah.
It always adds a layer of intrigue, like we're getting a glimpse into the minds of those who know Disney best.
It can be insightful, but it's important to interpret it carefully. We have information about Sonia Coleman, the senior EVP and chief HR officer, selling a significant chunk of her Disney stock.
That does raise an eyebrow. What could that signal?
Well, insider selling can sometimes indicate that someone with inside knowledge of the company's operations and future prospects might not be as optimistic about its performance. But it's essential to remember that insider trading can be influenced by many factors, both personal and professional.
So it's not necessarily a red flag, but it's definitely something to pay attention to.
Exactly. It's one piece of the puzzle, but it's important to consider it in conjunction with all the other information we've been discussing.
This is turning into quite the mystery, isn't it? We've got financial reports, streaming wars, insider trading. It's like we're trying to solve a case.
And the case is Can Disney retain its magic in the face of industry disruption?
Ooh, I like that. It gives our deep dive a sense of purpose.
Yeah.
So what clues do we have so far?
Yeah.
And what should we be looking for as we continue our investigation?
Yeah.
Well, we've seen that Disney is performing well financially,
Uh-huh.
but they're facing headwinds with the decline of linear networks.
Right.
Their bet on streaming, especially with the upcoming ESPN DTC launch, is a huge gamble.
It is. Yeah, it is a huge gamble. You've hit on a key point, though, this ESPN streaming service.
Right.
It could be a real game changer for Disney. It seems like they're pulling out all the stops to make it a success, with personalized content and integrated betting and all those bells and whistles.
It seems like such a logical next step,
It does.
given how many people are cutting the cord and moving to streaming for their sports.
It does, but it is a crowded market.
Right.
They're going up against some established players, like Amazon Prime Video, which has secured exclusive rights to some major sports leagues, and other streaming giants who are also investing heavily in live sports content.
So it's not a guaranteed slam dunk.
Yeah.
What do you think are the biggest challenges they'll face with this ESPN streaming venture?
Well, for one, they need to convince sports fans to pay for yet another streaming service.
Oh, that's a really good point.
Consumers are already feeling subscription fatigue.
Yeah.
And with the cost of living rising, they might be hesitant to add another monthly expense.
It's like trying to squeeze one more streaming service onto an already overloaded shelf.
Right. And then there's the issue of content exclusivity.
Yeah.
To make the ESPN streaming platform truly compelling, they'll need to secure exclusive rights to major sporting events.
Right.
That can be expensive.
Yeah.
And competitive, as other streaming services are also vying for those same rights.
It's a high-stakes bidding war for the hearts and eyeballs of sports fans.
Exactly.
Yes.
And they'll also need to deliver a seamless and engaging viewing experience.
Right.
Sports fans have high expectations when it comes to streaming quality.
Yeah.
Especially for live events. Any technical glitches or buffering issues could quickly turn them off.
So they need to make sure the technology is rock solid and the user experience is top-notch.
Absolutely. And they'll need to effectively market the platform and differentiate it from the competition.
Okay.
They need to clearly communicate the value proposition to sports fans and convince them that it's worth subscribing to.
It sounds like they're juggling a lot of balls in the air with this ESPN launch.
They are.
But if they can pull it off,
Yeah.
it could be a huge win for them.
It could be transformative, but it's a big if.
Okay, so we've talked about their financial performance, their streaming strategy, this big bet on the ESPN platform, and the challenges they face with the decline of their traditional TV networks.
Right.
It's a lot to digest.
It is.
But before we wrap up, there's one more piece of the puzzle I want to explore.
Okay.
Those insider trades we mentioned earlier.
Right. The insider trading activity can provide some interesting insights, although it's important not to read too much into it.
Right.
As we discussed, Sonia Coleman, a senior executive, sold a significant portion of her Disney stock.
That move definitely sparked some curiosity.
It did. And while it's impossible to know her exact motivations, it's worth noting that insider selling can sometimes be a sign that someone with inside knowledge might not be as optimistic about the company's future prospects.
So it's not necessarily a cause for alarm, but it's a data point worth considering.
Precisely. It's one piece of information among many, and it's important to look at the bigger picture. On the other hand, we also have CEO Robert Iger and several directors receiving stock awards.
Right. You mentioned that those awards don't necessarily mean they're bullish either.
Correct. It could simply be part of their compensation package. However, it does indicate that their interests are aligned with the company's performance, at least to some extent.
So we've got some insiders selling some receiving awards. It's a bit of a mixed bag, just like the analyst opinions we discussed.
That's right. And ultimately, it's up to each investor to interpret this information and decide how much weight they want to give it.
It's all part of the detective work, right? Trying to piece together the clues and figure out what the future holds for Disney.
Exactly. And like any good mystery, there are always multiple interpretations, and the ending is never entirely predictable.
Speaking of endings, we're getting close to wrapping up our deep dive.
Okay.
So let's put it all together. What's your overall assessment of Disney's future?
Well, I think it's clear that Disney is at a pivotal moment in its history. They have these incredible assets, beloved brands, a vast content library, a global footprint, but they're operating in an industry that's undergoing rapid transformation.
It's like you're standing at a crossroads trying to decide which path to take.
That's a good analogy. They can choose to cling to their legacy businesses like traditional television and theme parks, which are facing significant challenges, or they can fully embrace the digital future and go all in on streaming.
And it seems like they're trying to do a bit of both, right? Hedging their bets and hoping to find that sweet spot where they can leverage their existing strengths
Right.
while adapting to the new realities of the entertainment landscape.
Exactly. It's a delicate balancing act, and it remains to be seen whether they can pull it off successfully.
So is Disney's magic fading? Or are they about to conjure up a whole new chapter of success?
That's the million-dollar question, isn't it? And the answer is likely to be a combination of both. They'll inevitably face challenges,
Right.
but they also have the resources, the talent, and the brand power to overcome them.
It's a story that's still being written, and it's going to be fascinating to watch how it unfolds.
It-
But for now, I think we've covered a lot of ground and given our listener plenty to ponder.
I agree. We've explored the financial landscape, delved into their streaming strategy, examined the upcoming ESPN launch, considered the impact of insider trading activity, and even touched on the concept of an economic moat. It's been a comprehensive deep dive.
And we've only just scratched the surface.
Well,
What strikes me is that Disney's future seems to hinge on understanding their audience,
yeah,
those die-hard Disney fans,
right.
and the viewers constantly searching for something new.
You're absolutely right. It's not enough for them to just create great content anymore.
Right.
They have to deliver it in a way that resonates with those evolving preferences
Yep.
and caters to, these diverse viewers.
It's like they're trying to bridge the gap between their legacy, Mickey Mouse princesses,
Yeah.
that sense of wonder,
Right.
and the demands of today's media landscape.
Precisely. And all while managing Wall Street expectations and navigating global markets.
Right.
And, oh yeah, dealing with the complexities of running a global entertainment giant.
It makes you realize that behind all the magic and storytelling,
Yeah.
there's a very real business with a lot at stake.
Oh, absolutely. And the decisions they make now
Right.
will echo for years to come.
It's true.
Can they remain a leader in this new era? Can they truly make that leap to a streaming first model?
So many questions. And that's what I love about these deep dives.
Yeah.
We get to analyze,
Right.
speculate,
Yeah.
and maybe even glean some insights into how these massive companies operate.
It's like we're playing armchair CEO for a day, but
Okay.
without the pressure of actually making those tough calls.
Exactly. We can indulge our curiosity,
Wow.
weigh the pros and cons, and offer our own perspectives.
Yeah,
But at the end of the day, the decisions rest with Disney.
they do.
They're the ones holding the magic wand, so to speak.
And we'll be watching to see what they conjure up next. The entertainment industry never stands still.
Right.
And Disney is always at the forefront, shaping the stories we consume and how we experience them.
Well, there you have it, folks. Another deep dive complete.
We did it.
We hope you found this analysis insightful. If you did, be sure to subscribe to our channel and hit that bell icon so you don't miss out on future deep dives into the companies and topics that matter most to you.